Okay, ladies and gentlemen, let's go back to school. It's gonna be like back in a lecture. I have my whiteboard, I have my pens, I feel like a professor. But yeah, let's get into this lecture. So it's not gonna be a boring one. I'll try and make it fun and entertaining. But basically, the idea is today we're gonna talk about the circle of success, I wanna call it. I have some thoughts in my mind, so I'm gonna break it down and kind of brainstorm with you to go through some ideas of how to make a success plan. Because as traders, we know what we need to do roughly. We need to do our risk management, we need to do our profitability edge and all of these things. But our thoughts are always scattered. And our mind is always scattered, and therefore our plan of action is usually scattered. So this is a mental exercise I want all of you to do, and I'm going to do it for myself. It doesn't mean you directly copy what I'm doing. Maybe take inspiration, but do it for yourself and see what you come up with. So let's start off with the circle. Let's call this our success circle. And in our success circle, I want to have three main pillars that I want to focus on. So if I want to be a successful trader, or if I want to be more profitable next year, what could I do to make it a better year for me that I haven't already done, that I haven't already focused on? So I want to divide it into three main pillars, and that's where we can start to dissect our success circle. So let's divide it into three parts. The three parts are going to denote three major areas in our trading that we want to be focused on. Now, when it comes to your trading, there's so many things you could focus on, and I could just make a whole success circle on just education and building a trading edge. And that's the problem. People have too many scattered thoughts, and it's very hard to excel in a few avenues if you're trying to master so many things. You kind of have to choose, and usually being more focused and more specialized usually yields more results. So let's focus on three major pillars, and what I want to do is divide these three pillars into three parts each. So our success circle, it has three major areas, and each area is divided into three parts. So we have 9 categories. These are going to be your 9 major focal points. There's of course a million other things you can focus on, not just in your trading, but just in your life. But let's focus on just these 3 major pillars and dissect them to have building blocks to get to them. So let's write out the 3 major headlines. Let's call the first one our trading edge. So then we have our psychology, and our last one is going to be account management. These are the 3 major areas I want to tackle. So you find your 3 main areas in your trading where you think you need to improve on, and then let's dissect that further. So let's talk about the first one, which is our trading edge. If I want to improve my technicals and I've already reached a very high level, where would I want to put attention and time and effort to make sure my trading edge always increases and is always improving? So number one for me is continued M1 mastery. So I'm not even going to talk about the limiting beliefs most traders have that M1 is noise. Like I've said before, you can watch a movie in 360p and you can watch it in 4K Ultra HD. Yes, you're still watching the same movie, but the level of detail and the level of information you get in the M1 time frame, if you're trading without it, in my opinion, you're trading blind. And yes, you can be profitable with M15 or just H4, of course. But if you want to really master the markets and do the level of trading that I've already shown, the signals that I've given publicly and a track record I've shown and the profitability and everything, I've been doing this for years, and I used to be a higher time frame swing trader. Go and check my old YouTube videos where I was doing swing trades that I was holding for days and weeks on end. Even some trades I was holding for months. I was a position trader, and that's where I started my career, and I've transitioned down to M1 mastery and intra-session volatility and mastering my trading accordingly. So to further enhance M1 mastery, what do I need to do? I need to understand deeply the tendencies of M1 price action. I need to understand displacements better. I need to read intentions better. I need to be better at reading minor or micro inducements and time correlated factors. So basically, when you start to master M1, you have your concepts and theory, and that's something I already have. I know the concept of inducement and liquidity very well. I know how liquidity is built up and engineered, traps, how they're made, types of liquidity pools, and all of these things I know. So if I want to master further my M1, my approach will be immersion. So to really master M1, I need to really immerse myself deeply into M1. Something that you already know is for the last 2 years, I have not missed a single M1 candle in 2 years on EU and GU during a London session or a New York session. I watch every single candle, even if I'm not trading it, because I like to watch the tendencies of price action. And I like to have this thing called serendipity learning, where a very fixed and rigid mind will not birth creativity, especially when you have pressures of trading and you have a plan that you're rigidly fixed to. Your mind is focused and is not taking an input from the external. And what I've talked about in other videos is the goal of a master, somebody that's truly mastered something, is to also have a dimensional mind. And to have a dimensional mind, you need to allow creativity in. You need to have this wide scope of mind. And to really master that, you need to be very good at building connections. And that only happens, creativity and imagination only happens when you have a loose, flexible, non-rigid, non-stressed mind. And therefore, that's where you'll make these correlations, or you'll think spatially, you'll think in patterns, and you'll have these serendipitous moments where you connect things that you ordinarily wouldn't. For example, a lot of things that I've created in my trading, a lot of the refinements I have, they're not taken from the internet. A lot of things obviously I didn't create, but there's also certain things that I use in my trading which I created, I founded. I didn't see it on the internet, I didn't buy a course and learn. I watched price action in depth for years and years with a flexible mind and started to connect the dots and have these serendipitous moments. Have you ever heard that thing of, let me sleep on it? The idea being where you have a problem problem, and the first pass, you don't know how to solve it, and then maybe 1 week later, you come back to the problem, and then the answer becomes so apparent. The reason for that is when you revisit a problem, when you revisit things, you let your subconscious work, and your mind will make these subconscious connections. When you come back to it, you look at it in a new way, and you make different connections, and you solve it in a different way, and you see it from a new angle. And if that's something you've experienced, then you'll definitely know the power of that. And that only comes when you revisit a problem. So something that I'll do is go over my tape. I'll go over my trades and I'll track them and I'll see, did I make the right decision? I'll look at it without analysis and reanalyze it days later to say, okay, did I make the right decision? Can I view it in a different way? Could I have improved that trade? So therefore, for me to really be continuing to master M1 is continuing myself to deeply watch M1 price action like I have for years, and I'll continue to do it. And over time, this births refinement, this births ideas, and this births improvements. Next will be accuracy. Sorry for my handwriting. Remember, accuracy and precision are different things, and I don't want to be having a tighter stop loss. I can have trades with a 1 or 2 pip stop loss. And at times when I've done an entry based on the M1 IFC that I use, refined IFC that I have, and sometimes it's given me a 1 or 2 pip stop loss, I will not take that trade. I'll purposely go to M2 or M3 or M5 to widen my stop loss. I've reached a point where I don't need more precision. I don't need a smaller stop loss, because that's where spread really becomes an issue. Even though I have a very good broker and my spread is very thin, or it's raw spread accounts, I don't want to have these issues of slippage and even a minimal spread becoming an influence on my trading, or commissions that definitely become an issue, because the tighter your stop, the larger your lot size, and therefore the commissions become larger. So I'm no longer chasing precision. I'm chasing accuracy. Accuracy means I don't need a smaller stop loss. I need to be taking sharper entries, meaning tap and go entries. And I found that certain trades that I take, certain models that I have, they'll be precise. I'll have a 3 pip stop loss. It'll go to my target. It'll be a 1 to 10 trade. So I did everything correct. A lot of people stop there. Okay, I'm profitable. I'm doing everything right. So therefore I'm done. And that is a very limited way of viewing the world, because you can win a game 1-0 and you can also win a game 5-0. Both of them are a win. You both got the outcome, but there's a difference in winning 1-0 and winning 5-0. So therefore for me, to increase my accuracy, it's a desired goal, because therefore it improves my strike rate. It removes reliance on my emotion, and it's tap and go. Whereas it taps on my sell limit and then directly goes, and it doesn't hang around. And the way to really master that and understand where are these more accurate entries is understanding intentions better. So it's going to link to M1 mastery better, but it's those highly volatile trades. So I want to more deeply understand where are those trades that are really trading away from the inducement of the day, and therefore identifying the most meaningful opportunities and the opportunities that have the most liquidity. So it's going to tie into me better understanding liquidity, better understanding M1, better understanding daily cycle variations, and refining the trade models that I already have. I know the win rate of each model, but I want to get to a place where I'm starting to condense them down. I don't want to have that many. I want to have less, but they're more precise, more accurate, and more profitable. And then I stick to few trade models as opposed to a wide arsenal of trade models. The next thing that I want to improve on, late last year, I decided to change my trading in 2022 from subjective partial taking, where I took partials based on price action. For example, when it made a new lower low in a sell position, that makes sense to take profit there. So I was basing my profit taking based on the markets, based on technical analysis. And when I transitioned that over to data-driven profit taking, where I had fixed partial levels that are optimized for my trade models, that's when I had major breakthroughs. I didn't have to change my psychology. I didn't have to change my trading edge. I didn't have to change anything. I just had to optimize the way I take profits. And I did that. And my profitability vastly increased, and I had huge breakthroughs. So I was very happy with that. And then later on in the year, in Q4, I slightly modified it, where I used to have the fixed system at 1 to 3 risk reward, 50% position size, at 1 to 10 risk reward, full position size. Whether it was a pro trend, whether it was counter trend, all of my trade models, they were fixed like that. What I started to do at the end of the year was I still did partials like that. But what I started to do is, if it was a hedge position, I'd follow that protocol. But if it was a trade that was higher time frame aligned, it was one of those A+ setups that had swing potential, then I did my 1 to 3 risk reward, 50% position, 1 to 10 risk reward, 40%. Not full volume, not 50%, 40%, and I'd leave 10% of my lot size as a runner for swing potential. And those trades that were pro trend, that went to those theoretical 1 to 20, 1 to 30, 1 to 50 risk reward, I was still holding 10% of my position size. So that could add another 4 or 5% to my account just by leaving that runner. And that became effective for me, even though it wasn't my plan, even though I'm just going from liquidity pool to liquidity pool, mastering session volatility. And that's my goal. I want to still have a strong element of position trading and swing trading for that small volume that I leave. And that means I want to dive deeply into fundamentals and dive deeply into higher time frame and just understanding swing trading to a higher level and maximize that portion of my trading, which for now is just a runner that I leave and mentally check out of and come back to it in a few days and see where it's at, which is not the most effective. So I know that's a lagging point that I want to focus on. So that's the last thing I want to focus on in my technical edge is swing potential. These are the 3 areas in my trading edge that I would definitely want to be focusing on this year. Next, let's move on to psychology. Now, if you've seen my extended videos, those videos that I do no edits, it's not in my studio, it's shot with my iPhone. I speak at length usually about trading psychology and I have a lot of thoughts, and I like to consider myself very pensive, and I like to be very stoic, and I like to be almost philosophical in everything I do. So therefore I spend a lot of time on my trading psychology and thinking, and not only thinking on how I can be more in control of my emotions, but also understanding where they come from, why that emotion exists in my body. We're not robots. We're not supposed to delete our emotions and scapegoat them and go to the gym to ignore them. We're supposed to understand, why is that emotion being brought in me? If I'm feeling greed, that's for a reason. Is it because I'm chasing an outcome? Is it because I fear an undesirable outcome of not making profit? Whatever that childhood trauma may be, or whatever that emotion is stemming from, you have to learn and address it. Otherwise, you're not tackling your psychology correctly. You're just putting in systems to control it. So my personal opinion is I have very good control of my trading emotions. Not only because I've set up my technical edge in such a way that I'm not really reliant on them, and therefore my trading psychology doesn't need to be on point, because a lot of the decision making is done in my preparation. And in general, my friends and the people around me, they know I'm a very calm person. I don't get angry. I don't raise my voice. I don't get emotional. If something happens that is out of my control, I miss a flight is delayed, I'm so unfazed. I've been through so much stress and trauma in my life. I've had so many things go against me in my life. I've had so many things that I used to pray and beg God, like, please make this work out. I really need this, literally in tears, since I was younger, from my school years to my university years. So many traumas that I had. And what I realized is life always works out, and usually God has a better plan for you. And what you think is the most important thing in your life, and you need it to go exactly like this. I need to get the best grades in this exam and go to this university, and everything you're obsessed on, you realize that if that door was closed for you, another door opens up and another route in your life presents that you would never have expected. And just through that reinforcement and reflection, I've become such a calm person and such a faith in God, and I just let whatever happens happen. So in that sense, that's my personality type and something I've worked on. So training psychology, for a lot of people, you have to reach this base level, and it's that 80-20 thing, where 80% of your trading psychology can be resolved by a few things. And if you really want to get a master, that last 20%, that's when you have to really focus on niche, nuanced topics. So for me to improve my trading psychology, I actually am going to be a little bit cliche and talk about routines and habits, because I used to be super structured and super disciplined in my earlier years when I was curating my strategy. I was disciplined because I was consistently going to the gym, going to lectures, had my homework, deadlines, clinics, exam preparation, and then I also had my trading hours where I'm building a plan, backtesting, journaling, and all of these things. So I was very regimented in my uni years. And as I got more advanced in my trading and I had a very set strategy, backtesting no longer become fruitful for me, because I was up to date with the market every day, because I already had a system. But creating that system requires a different discipline and requires a different approach, because you're learning, you're a sponge, you're analyzing everything, and you're creating a plan. It requires more imagination and creativity and real work, let's say. So as I became more profitable and experienced and fixed in my ways, my routines and my discipline didn't need to be so strong, because I didn't really require a morning routine, because I knew my plan, I knew my system, I knew everything I needed to do. So whether I took a cold shower or not, it didn't really affect my trading. Whether I meditated before my trading, it didn't really affect it. Whether I had a nutritious breakfast before I went to the markets or didn't, it didn't really affect my trading, if I'm honest. And I used to do all of that. Believe me, I used to do all of the typical online self-help, self-improvement things. I did all of them. And when I started to realize, yes, they are definitely worthwhile endeavors, because they improve you as a person. They embody better character traits, and all of these things are necessary to have that paradigm shift to go towards the goals you want. But you also realize, if you become a self-help junkie, if you just become one of these people that consume podcasts and read books all the time, you are kind of procrastinating in a productive way, where you think this morning routine of 1 hour where you meditate, journal, pray, eat healthy, cold shower, go for a run, all of these things, it does improve you as a person. But the reality is there's no substitute for having a to-do list and smashing it out. And that's the reality. No matter whatever pre-work you do, the to-do list still needs to be done. So what I started to do as the years went on, I just started to become very logical and problem-solving orientated. And I just started to focus on the things I needed to do. And therefore this year I did let a lot of those things slip. But that was a step in the wrong direction, because then I started to remove my morning routine. I also let go of the gym a little bit, unfortunately. So that's something I'm going to improve on next year. I pretty much let go of meditation. I still pray. As a Muslim, I pray. But the meditation portion that I was doing daily, I completely let that go. And not to say that any of these things had a direct ripple effect in my technical edge. It didn't really have an effect on my trading psychology either, but it did have an effect on me as a person in terms of my discipline, routine, and regimen, because I was so focused on my goals and focused on my to-do list, and I didn't miss out on anything I needed to do. I achieved a lot, I did a lot, I completed a lot, but I didn't grow on a personal way. And I do believe that to improve in your trading psychology, it's not like learning a maths equation where you just learn the formula, you do some practice examples, and then you know how to do that math problem and formula. No, it's more like learning learning a language, where you don't just learn a language by memorizing 10 words. To learn a language, you need to know grammar, you need to know vocabulary, you need to know phrases, you need to know fluency. So learning a language takes years to really master, but learning a maths problem can take hours. And I believe trading psychology is one of those things that is a paradigm shift. It takes years and years to develop and build and grow. That's going to be where I'm going to be focusing my efforts on, which is routines, reading, and reflection. I'm going to do an extended video on all of these topics because they sound cliche, but they are so deep and meaningful if you know exactly what I'm referring to. And then the last thing to focus on is account management. So I'm going to do this very briefly. So the first one is profit taking. The second one is risk. And the last one is macro. So these are things I've already spent a lot of time on and had huge breakthroughs where I made my profit-taking systems fixed for data and optimized for data. I also had risk management protocols and systems as opposed to just risking 1% per trade. I made systems for that. And then macro. The belief that people have is I need to squeeze the most out of my winning trade. And if I take a trade today, I need to get the highest risk reward and make the most profit on that trade. And that's a fallacy, because if you look at your trading on a trade-by-trade basis on a short-term horizon, you're no longer looking at the macro. And the macro is you will in your lifetime take 1,000 trades. And if you're optimizing trade by trade, yes, it's the right decision on that day. But when you look back and you zoom out, you realize it's hugely inefficient because you're optimizing for the winners. You're optimizing for those trades that go to your full profit. But what about those trades that went part of the way and then came back to break even? So those trades you took no profit on, but you ignore them. It wasn't a loss, it was break even. So you have to sometimes zoom out and look at the macro and analyze all of your trades of the year and put systems in place and make refinements and deductions from that information by looking at the macro, making your trade reports and analyzing from a zoom out position. So these are the 3 areas I'm going to focus on in my account management: improving my profit systems, improving my risk systems, and always optimizing for data and looking at the macro. These are the 3 major areas I want to hit in my trading, and these are the 9 sub areas that I personally want to focus on. So do this success circle for yourself, find what's most important for you, what will birth the most results, yield the most, as opposed to focusing on certain things that have a small benefit. Focus on the big things that are going to have a huge ROI, and yeah, your attention and your focus and your energy should have a high risk reward. And I think the success circle will definitely help you. So if you enjoyed this video, thank you very much for tuning in. There's another video that I'm going to tag here that is super important for you to watch because it's going to make this video make a lot more sense. So go ahead and check that out, and I'll see you there.